All right, guys. Hey, I'm here with Casey Hamlin with CrossCountry Mortgage, and this is part 2 of our chat. Don't click away from this video because there's lots of great information, but when you're done here, if you didn't watch part 1, you can check that out on our channel. And thanks for watching. Make sure you hit subscribe, all that kind of stuff. Casey, welcome back. We're here for part 2. How are you, buddy?
I'm great. Thanks for having me.
Awesome, man. We're gonna jump right in. You know, last time we asked you a bunch of questions about the market and all that stuff, and we're just gonna continue on because we got a few more. Jumping back in. How does the current interest rate environment affect my options for financing a home purchase?
It certainly does affect home buyers. There's no doubt about it. You know, it does make affordability a little bit more challenging as far as stretching that monthly payment and getting to that price point they want to get to. But, you know, there's ways to combat the mortgage rates. And, you know, one of the ways that we've really taken a stance on is asking buyers, hey, how much cash do you have to work with? And let's say a buyer says, hey, I've got 50 grand. Okay, great. So instead of using all $50,000 for the down payment, we might suggest something where they use a little bit less and put some money aside to buy down the interest rate from where it currently is.
Okay, yeah. Yep.
And that helps make a bigger difference in their monthly payment.
What does buy down mean?
So what I'm referring to discount points. So one discount point equals 1% of the loan amount.
Their interest rate is 6%. You can buy it down to 5%.
No. So
okay.
In this case, let's say that your loan amount was $400,000.
Okay.
Okay. One discount point would be $4,000.
Oh, okay. That's what you got. Okay, gotcha. Yeah, that's the cost. Okay, gotcha. Now we're together.
What that does, though, for the buyer's interest rate is it should drop the interest rate close to 0.5% right now.
Okay, yeah.
And that's noteworthy because in 2020, 2021, if a buyer paid 1 point, it would drop the rate by about 0.25%. Okay, so now in this market, buyers have deeper discounts on rates when they pay points.
And that's a big deal. Like 0.5% on a mortgage rate is a lot of money, isn't it?
Depends on the amount, but typically like $100 a month or more.
That's great.
So it does make a big difference. And so, you know, if you kind of get strategic about how to use your money and you just say, well, you know, we can either use our 50 grand to get X house at 7.25%, or we could use our $50,000 and get a higher price point because we now have an interest rate at like 6.75,
right,
something like that.
And over 30 years, I mean, that's a lot of money. It's probably worth it.
They far outweighs the cost.
Right.
You know, so that's kind of an approach that I think buyers should consider in this market because, you know, there is more bang for their buck when they buy down the rate.
Something else you could do is maybe go to the seller, ask the seller to pay some points, correct? You know,
yeah.
I mean, I know in a hot market, the seller might say no, and it's hard to achieve that, but you know, some properties you could maybe do that. Part of the negotiation. Speaking of negotiation, it's a nice transition.
It was.
Any kind of strategies that, you know, we can use to get, you know, better interest rates and maybe negotiate that out?
Think about it like that. So the interest rate is a reflection of risk. The more things a buyer can do to reduce their risk, the better interest rate they'll get. Okay. So an example might be increase the down payment from, let's say they could get money from family that could help them out, or they could access grant money or something. Okay.
Right.
That's one. 2 would be to really work on getting their credit score above 780. Used to be that to get the best rate, you had to have a credit score of over 740. And that has changed. They upped the requirement to 780 now.
That's the A plus, right?
That's considered A plus.
Right.
Okay. So those are 2 things that a buyer could do. The third thing is make sure that they're buying within their means, right? Mm-hmm. So if they keep their monthly obligations lower than half their monthly income, that's going to help get their interest rate lower versus if they were extending themselves financially.
What advice do you have for buyers that might be looking at the ARMs, you know, adjustable rate mortgages versus fixed rate mortgages?
And adjustable rate mortgages are definitely valuable for some people. The shorter period of time that they are fixed for, the lower the interest rate will be. So they're taking on a little bit more risk. You know, the buyer is, as far as, you know, hey, we're going to gamble a little bit, play our cards and against that interest rate changing in less than 3 years. So, you know, ARMs work, they have lower interest rates than 30-year fixed mortgages. The idea behind them is that the homeowner will refinance those mortgages or those ARMs while they're in a fixed rate period,
right,
before they become adjustable.
Right. So yeah, once the time period is up, after 3 years, they potentially can jump way up.
Yeah.
At that point. So that's you got to make sure that you're prepared for. I know there's a lot of horror stories around adjustable rate mortgages. Maybe people not being as mindful as they should. Which one is better? Which one do you prefer? Which one do you talk to people about? ARMs or fixed rate mortgages?
Problem is that there's no crystal ball on rates. Nobody knows exactly how long we're going to have rates higher than where they've been, right? Or where they've been recently. So, it's hard to tell someone to take a 3-year ARM or 5-year ARM. So I tend to push out the fixed rate period as long as possible. And then the second thing I always make sure is the buyer putting down a significant amount of money. Not that the market, we anticipate any market changes that would result in a loss in equity, but in the event something did happen where the market had some sort of correction, and we just want to make sure they have put down enough money where they could easily refinance that loan.
So they're not up against like, oh crap, I got to refinance, and they can't.
Exactly.
Or yeah. So really, it seems like if somebody's looking into that and asking questions, we just want to make sure that they're going into it with their eyes wide.
Absolutely.
I think that's the big deal.
Absolutely.
And of course, that's our job to educate them. And this is great information. So let's see, how long does the mortgage approval process typically take in today's market? And what kind of delays might there be?
Typically, you can turn around a pre-approval in the same day. As far as the actual underwriting process of getting approved, it depends how busy the lender is, on the market and whatnot. But, it's not outrageous to think that you could get, an underwriting approval within, say, 3 or 4 business days.
Oh, okay.
This market.
Yeah, gotcha. Well, that's actually good to know. But you can get like pre-approved, like if somebody wanted to write an offer, like, I got to write an offer today. You can at least get a pre-approval, but then also start that process, in case they miss out.
Absolutely.
And all that stuff. So they can be underwritten and all that stuff.
Absolutely.
Okay, that's great. Anything that can cause delays?
Well, I think that, again, the more the buyer's prepared, so if they have their paperwork handy, they have the tax returns, they have the bank statements, they have the pay stubs, like that, all that stuff allows the lender to be able to make a more accurate determination of their qualifying. What we want to do is make sure there's no surprises down the road that would impact their loan. So
gotcha.
The more stuff we get up front,
and don't hold anything back, right? Yeah.
No, I mean,
right, because if they do, it's just going to come out later anyway. All right, so hey, last but not least, I'm excited to talk about this. We'll see what kind of information we come up, but are there any specific factors or trends in the local market here in Maine, that everybody should be aware of when they're applying for a mortgage?
In my opinion, it's pretty competitive. If you're a buyer out there, having your pre-approval done up front, the stronger you can make a case for yourself, the stronger your offer, the better chance you have of beating out your competition.
Yeah.
Right?
Yeah, very true.
And so be able to have that pre-approval ready, having maybe gone through underwriting, having all that stuff done up front allows you to beat out a multiple offer situation. I mean, that's kind of a big thing. It's just being prepared, because you never know that when the properties come on, they go so fast.
Yep,
right,
for sure.
So you could be sitting there thinking, I'm going to wait for a couple months, and then all of a sudden, boom, the right one comes along that checks all the boxes, and all of a sudden you got to get the paperwork to the lender, and can't get a hold of something. Now it's been 2-3 days, and they might have 3 or 4 offers.
Right. Yeah, I think the biggest thing that I see like here in Maine is Maine's such an interesting state to me, because you got Portland and Saco Bay, which is a little more urban, but then like one day we could be talking to somebody about a condo downtown Portland that has totally different scenarios than buying a 4-acre property out in Standish that has a well and a septic. You know what I mean? Speaking of like well and septic way out there, I mean, is there anything that you got to be mindful of around that?
Some loan programs do require water tests if there's a private well.
Okay. Yeah.
They require the septic to be a certain distance away from the water source. Probably a smart idea. There's things like that. I think in Maine, because we are a New England state, one of the older states, we have older properties.
Mm-hmm.
So property condition can sometimes come into play. If you've got a conventional loan, really they're just concerned with the actual, housing structure and making sure that's safe, sound, move-in ready.
Right.
But if you're dealing with a government-backed loan like FHA, they're concerned with the entire property. So even if there's like let's say the main house, where you reside is fine, but there's a barn that has chipping and peeling paint.
Right.
That can get flagged and have to be dealt with for financing. So those certainly come up with homestead estate.
And sometimes it's the same client. Like, oh, I'm interested in this condo. Oh, wait a minute. No, I want a farmhouse. It's like two drastically different things.
Yes.
But that's why it's really great having, somebody like you who just knows so much about the market, the local market, seeing that you're from Milo.
Big city.
Is that right? The big city of Milo? What's the population there? Do you know? Roughly?
I think it's like around like 3,000.
3,000 people. Yeah, that's great. That's a Mainer right there.
Hopefully, in fact.
Yeah, right. Yeah. There's probably 400.
Right. They're all right extended family.
Yeah. Yeah, right. Casey, I can't thank you enough. This was a ton of great information. Thanks for taking your time to join us on the Make Maine Your Home YouTube channel. I really appreciate it, buddy. Thank you.
My pleasure.
Yeah. Hey guys, hopefully this was helpful to you. If you have any questions, comment below. We'd love to hear from you and help you out. And remember, if you make Maine your home, you don't have to do it alone. It was pretty good, man. Please make sure that you subscribe to the channel and one of these buttons over here. We get a lot of great information about real estate, the state of Maine, cool things to do, all that kind of stuff. And of course, if you have any questions at any time, comment below or hit us up on all social media platforms and we'd love to help you out. And we love talking about Maine and real estate in Maine.